What is RSI? Welcome back to another episode of TA with MK. My name is MK. Today's episode, we're going to discuss RSI. Now, 20 years ago, if you were online, it probably stood for really slow internet, especially back in the days of dial-up, and especially when your friends started getting DSL at the time, and maybe it was only taking them half a day to get the new Britney Spears jam, and it was still taking you 6.5 weeks, right? Well, we're not going to discuss that RSI today. We're going to discuss what's called the Relative Strength Index, which is just an indicator that we use in trading to help us know when to open or close positions, obviously in confluence with other things. And we're going to discuss that in today's video, so hopefully you leave with a better understanding of what the RSI is as it relates to trading. Now, if you're liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Now, if you're a long-time subscriber to my channel, you know I love being overly thorough and tackling these topics from the inside out. So, of course, we're going to start with the official definition as stated on Instopedia.com for the Relative Strength Index, or the RSI. What is the Relative Strength Index? The Relative Strength Index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. The indicator was originally developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in the Technical Trading Systems. If anything, we just want to make sure that old Wilder Jr. here got his proper credit, as he's the one that created the Relative Strength Index. Looks like he passed away in April of last year in 2021. God rest his soul. And thank you, sir, for your contribution to technical analysis. Alrighty, first and foremost, we want to show you how to add the RSI indicator to your chart in Tradingview. So you want to be on Tradingview.com. Obviously, make sure you've pulled up some sort of a chart. In this case, I have the Bitcoin USD pairing for on the FTX exchange, as I've just been tracking kind of the price of Bitcoin over the last couple of days. Now, if you go up here on the top left where it says indicators, go ahead and click there. And then in the search box, we're just going to type in RSI. Romeo, Sierra, Indigo, and where it says Relative Strength Index, you're going to click that, and that'll add that indicator to your chart. Now, in order to see your indicators that you have on your chart, you have to double click, obviously, and then they show up down here. Double click to hide. We're going to go ahead and double click so that the RSI and along with my other indicators come up. And then up here on the top left, we're going to click this little arrow that shows next to however many indicators you currently have. Right now, I have 5 total. That way it expands them all to where I can get to the settings, right? Then we're going to go down here to the one that says RSI, and we're going to click where it shows settings. Now, this is where, if you would like, obviously you can change some of the settings for the RSI, as far as its color appearance and some of these other things. Let me briefly explain what some of it is. Now, the overall RSI, which in this case for me is just this yellow line that goes up and down, right? I could change that to whatever color I wanted. Let's say I wanted green, there we go, we're green. And I'm going to go ahead and turn it back to yellow. RSI-based MA stands for the moving average. That's something that they updated recently and added to the RSI. For me, that's this white line that's going through. And so it's just an average, a moving average based on whatever time frame that you're currently on. And so once again, you can make that whatever color you want. If I want it to be blue, or white, or whatever. Or if you don't want to see it at all, you can come click on it and just turn it to 0% instead of 100%. The Bollinger Bands are on there as well. I don't really use those, but those are there. You can change the colors. Now, the ones that are worth changing sometimes are this upper band, middle band, and lower band. You can barely see right now on mine, but it's these dotted lines, just because it's not something I really pay that much attention to. But that being said, if you wanted to change those, you could do something like, let's just say, blue, right? So we could change all these to blue, maybe just so they're, maybe even a lighter blue so you can see them a little bit better, right? So let's change these to lighter blue. Boom, bada boom, bada boom. And then maybe you want to have them not be dotted lines. Maybe you just want them to be lines, right? So if I turn these on, now it's a little easier to see what's the oversold area and the overbought area, on the RSI, which in my case, by default, it's 70 and 30. A lot of traders and even several guys that are in a trading group I'm a part of actually change this to 80 for the upper band and 20 for the lower band. So that's up to you if you want to do that. For today's video, I'll go ahead and just change that so you can kind of see. All that does is just move this band a little bit lower and this band a little higher. By default, it considers 70, to be the overbought conditions and 30 to be the oversold conditions. but some traders like to see it go a little bit lower to like 20 and a little bit higher to 80 before they close, sell or, buy, open positions, right? So that's something I would recommend doing. Now let's go ahead and head up here to the top left and re-click this box just to hide all those settings. And then we're going to double click down here in the open area of the RSI, pick an open area and double click. That way our screen is completely occupied or filled by just the RSI. And now let's talk about the basic things that you need to know as far as the RSI is concerned, right? Now, like the definition stated, this is a momentum oscillator, which just means any time that the RSI is going to the upside, it just means the momentum for that stock or crypto or asset is going to the upside, right? And the flip side of that is if it's going down, the momentum is going down. Now, it's generally believed by most traders, or at least the way that this thing is used, that anytime you're approaching 70 or 80-ish range to the upside, now it can go as high as 100. Obviously, this is an oscillator that goes from 0 to 100. But it's generally believed that once it hits between 70 and 80 to the upside, as far as the momentum goes, that the asset is considered to be overbought. It needs to cool down. And on the flip side of that, anytime you're down here 20 or lower, it's considered that it's very, well, some traders use 30, but 30 or lower, it's generally considered to be very oversold, meaning the asset is, considering the time frame, of course, in Confluence with other things, generally it's considered a better time to buy when it's at the bottom and considered a better time to potentially sell or take profits when it's at the top, right? Keep in mind, this is meant to be used in Confluence with other things. By itself, the RSI is obviously not great at giving buy and sell signals, and the reason for that is it can remain very, very overbought for long periods of time, and it can remain very, very oversold for long periods of time. And what I mean by that is you can also toggle, obviously, between the different time frames. So let's just say we go to something like the weekly for Bitcoin. Well, obviously, the weekly for Bitcoin is very oversold. It's more oversold than it was clear back in April of last year, right? April of 2020, sorry, not last year, 2 years ago. And, it's at a level where it hasn't been for several years, and we don't know how long it'll stay down here. It's sitting at 25 on the weekly, which is below that 30 number we talked about, but it can go as low as 0, and it can also hang out below here for long periods of time, which would just mean the overall momentum on this higher time frame remains to the downside. It doesn't necessarily mean just because you're down here that suddenly it's going to stop and just reverse the next day, right? That being said, it can be used with, again, in Confluence with other things to give you some good ideas of when maybe you should be taking profits in positions and potentially when's a good time to accumulate, right? Especially when you're on something like the daily or the weekly when it comes to Bitcoin. Anytime you're with the 70 or 80 range up here, which means it's very, very overbought, there's a good chance that at some point that's going to pivot and head back to the downside, right? Doesn't mean you have to close your entire position, but a lot of disciplined traders will then take profits, in percentages once it reaches this area. Flip side of that is just because it's down here at the bottom doesn't mean you've nailed the bottom, but a lot of disciplined traders will use that area between, 20, 30 and, lower as an area to start accumulating some positions, especially if you have more of a midterm, trading mentality, especially if you have a long-term trading mentality. Maybe you're just trying to accumulate Bitcoin, every few weeks. Well, clearly it may not be a good idea to accumulate Bitcoin anytime it's up here in this area, but historically, especially in these high time frames, it's not a bad idea, and over time it's proven to be successful to accumulate when you're on these the lower end, right? Okie dokie, now we're back out here on a fresh, clean Bitcoin chart, and I've moved the other indicators out of the way a bit so you can see the RSI a little bit better, as well as the price action. Now, I've used the word Confluence quite a bit in the video already, and what do I mean by that? What Confluence could you potentially use alongside the RSI to give you a better edge and help you make more sound decisions when making a trade? The three main things that I think most traders would combine the RSI with as far as trading Confluence would be support and resistance, more specifically price level support resistance, which I'll leave a link in the description to my video about price level support and resistance. If you haven't watched that, it's a good watch. The second one would be bullish or bearish divergences, which we're not going to discuss in this video, but there will be a link in the description for that video. I'm actually making it tomorrow, so unless you're watching this video day one that I upload it, that link will be in the description, and if you are watching it day one, just wait till tomorrow and then it will be there by that point. And then the third one would be trend lines, support and resistance, obviously. So patterns, I guess is what I mean to say as far as that goes. In today's video, we're going to discuss the first and third, which is going to be support and resistance price levels and support and resistance trend lines in combination with the RSI. Support and resistance is probably the most common, so we'll start with that. And we're going to use the price action back here between basically the middle of May of last year to the end of July. Go ahead and click Alt-H to put a horizontal line there across the screen. And what I mean by price level support and resistance being in confluence with the RSI is anytime the RSI, on a time frame especially as big as the daily, has reached 30 or lower, you start looking to see is price action near support. Because the odds, or statistically, the odds are more in your favor of a bounce in that case, right? The flip side of that would be obviously if price action is hitting resistance at the same time that it's overbought, meaning this level up here. But for this example, we're going to use oversold. We're going to use this big dip back here in mid-May of last year, where price action had come down to this previous area of support where Bitcoin had broken above 30K essentially and flipped 29/30K as support, right? And it was approaching that level again, and the RSI was down here at nearly 20, just over 20. So you may think to yourself, hey, this is a good spot to open a position. Yes, could it have gone lower? Of course it could have. Obviously, if you're using leverage or something like that, which we won't discuss in this video, you may have a stop loss just a 5 or 10% below that major support just to protect yourself in case that support was lost. But if you were just accumulating long term, you might look at that as an area when it's that oversold on the daily time frame and at support as being a good spot to potentially accumulate and hope for the a bounce, which it did bounce in that case, right? I guess the flip side of that, or an example, is maybe a time to start considering taking profits. We're going to put a horizontal line up here at the top. We're going to focus on the price action. This peak that was around mid-April of 2021, right? The first time that Bitcoin broke 60K and was up around 65,000. And then we're going to fast forward to around October of the later that year, where Bitcoin was again flirting with its previous all-time high. Now, could it have easily broken above that, flipped it as support, and continued to go higher all the way to the moon? Yes, of course it could have. But you start looking down here at the RSI at that time, point in time, and you were above 70 and you were approaching 80, which historically, if you look back, that's an area where price action, or at least the RSI, tends to get rejected. It's peaked its head above it several times, 85 here. Could it have gone higher? I've also mentioned at the beginning of the video, it could have hung out there for a long period of time while price just, continued to go higher. But a lot of people started, or disciplined traders started taking profits at that point because your RSI was approaching 80, which is obviously a level that means it's very, very overheated, or in this case, overbought. And it was approaching major resistance, which was the resistance of the previous all-time high. Now, it peaked its head above it once, came back below. Now, would you have nailed the top by selling the majority of your position here? No, because, you missed out on a little tiny last little move or a bull trap before it inevitably went down. But I don't think you'd be pinching yourself or angry if you decided to sell the majority of your position at that point. And the other one I wanted to focus on in today's video was if you're trading a pattern or a trend line of some sort, that's often you can find something similar happening down on the RSI. And even sometimes the RSI can front run what the price action's doing. I'm going to give you a good example of that. So you had this all-time high that happened in late November or mid-November of last year, right? Where price action was up here at around 60, just under 69,000, and eventually, you went down, but you kind of started to form this huge, large falling wedge that Bitcoin was in all the way, clear until basically February of 2022, so earlier this year, had this big falling wedge. Now, if you go down here on the RSI during that same time frame, you also had price action basically in a large falling wedge, right? Well, if you look down here, price action right here on January 28th broke finally to the upside of this long downtrend, right? Well, then you look at price action, and it was actually February the 5th, so the following week essentially, that it broke out and went on this little run where price action basically from the breakout, ended up going up about 15, about 20%, almost 18%. Now I realize that's not a huge move, but if you had a significant position in Bitcoin or were trading with some sort of leverage, that could have represented a pretty good trade. And basically what happened down here on the RSI is it broke above the trend line and retested it, flipping this previous resistance as support before the actual price action inevitably did the same thing, right? So in that case, you could have opened a position based on the RSI itself breaking out of the actual falling wedge before the price action did. Now, fast forward to current price action, and history doesn't have to repeat itself, but hey, maybe it could. This would be something worth tracking if you're someone looking to accumulate or open up a position for a midterm hold. You could draw this trend line on Bitcoin. Clearly, Bitcoin's in yet another large falling wedge, right? The RSI is not in as perfect of one, but you could draw this trend line across the top here and maybe trade this kind of similarly, right? You could say, hey, it's approaching pretty oversold areas on the daily. Could it go one drive lower? Maybe it double bottoms down here at the 20 area. But if you were to see at some point, you would set an alert on this upper trend line. If the price action breaks above that and flips that as support, odds are you missed a decent amount of the move, which would be whatever it did, wherever it bottomed, and probably would get back up to here. But that might represent a safer time to open a trade on it, knowing that it's flipped this major trend line that was previously resistance, right, as support, and often that can front run the price action, which then, could potentially follow maybe a week later like it previously did, and it breaks to the upside. And one final pro tip that I'll leave you with as far as it relates to the RSI is it's generally known that anytime you're above this midway line, the 50, your strongest moves to the upside happen when you're above the halfway point, and your strongest moves to the downside happen when you're below it. Here's a couple quick examples. Obviously, you can see here that once this broke back out of this little falling wedge, you can kind of see, right? It was in a little falling wedge. It broke out of the wedge, but also above 50. That's when price action exploded to the upside, right? Same thing over here to the downside. It lost the 50, flipped it as resistance right around here, and clearly we've had one of our more explosive downside moves to follow. So just keep that in mind also when trading in Confluence with the RSI. And that's going to be it for today's video on the RSI, or the Relative Strength Index. And as always, if you guys are liking the content, please remember to like and subscribe, and we'll catch you tomorrow. It's